And that sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we break down the markets one step at a time. We go through the charts, the news, the information, pretty much anything that's grabbed our attention that we've discussed as a team, and analyze it out there for you guys out there as our audience. Hashtag Team Tackle is our official hashtag. Pop that right in the chat, and let's get this party started here today. Got a fun show planned for you here today. We got Coach Tyler in to join us on a Thursday. Tyler, how you doing, sir?
Good, Tim. Excited to be here.
Yeah. I like how patient and methodical you are. It always gives me a peace of mind, Tyler. You just seem like you're always under control, right?
You should see me at 11 o'clock with my 4 kids that aren't going to bed. You would not say
Tyler, you always seem like you're in a good mood.
Yeah.
Like, has anyone here ever witnessed Tyler in a bad mood?
What's more likely to trigger you? You get beat at a video game and you get upset and throw the controller, or your kids throw a fit and won't go to bed?
Oh, kids, 100%.
Not even close.
Well, when you're dealing with like 17 of them, it does get stressful.
A little bit.
That's a little shot right there. I gotcha.
Right.
We got Coach Mark here as well. Marky, how you doing today, sir?
Well, let's see if I can measure Tyler's. I'm doing good, Tim.
Oh, he's so stoic. I know. I like it. It puts me in a calm place, Mark, to where we can just analyze the market. Maybe this is his zen, right? A little meditation before he trades, all that kind of stuff. I like it very, very, very much. Good vibes from you there, Tyler. And Mark, I think that was a pretty good impression. Nothing wrong with it at all. Today, guys, we're going to analyze, a lot of the stuff that's going on out there in the market, including the technicals across, the indexes and some of the sectors. One of the themes that's been developing the last couple of weeks has been this idea of potential rotation, whether it's into value or out of tech or whatnot. And as the markets have been bullish since we have the post-election kind of upward mobility, it's interesting watching this week. We had the gap out on Monday, the backfill. I'm going to get Mark and Tyler's take on the action that we've seen throughout the week and talk a little bit about that theme that has been developing. We had some economic data out of unemployment claims. The CPI number came out, showed a little bit of disinflation, at least for the month there, Cody. That was an interesting read, in my opinion. We'll take a look at that as well. Concerning COVID data and some headlines surrounding COVID, potential restrictions, things about that we're hearing out of the president-elect's COVID task force. I'll have Mark analyze all that, and then we'll get into some stock talk. Tyler did the option report over the weekend, and it was a really interesting week for setups where we had the gap out. Some of those charts are now developing, and we'll take a look at them and break them down one at a time. Let's get into the show here if we can. If you're new to our channel, by the way, subscribe, click the bell, come back and join us each and every day. We go live at 12:30 p.m. Eastern. And if you're new to Tackle Trading, this halftime report we do every day on YouTube is one of the things we do, but actually the bulk of our education is in our community on our website, tackletrading.com. You can join our pro member community with a 15-day trial and come and find us. Analyze these charts here, Tyler. Let's start with the S&P 500. What are you seeing, sir?
I switched over to the futures because with that gap on Monday, SPY is a little noisy, a little bit messy on SPY. So I'm partial to ETFs, but here's a situation where I think you've got a better look on ES actually. Can we be surprised that you're seeing a little bit of profit taking? I mean, come on. This thing was up a lot. I think that from a trading perspective, from a setup perspective, you shouldn't be disappointed that this is pulling back a little bit. It's a red bar, Tim. We're at the low of the day. Intraday is going to be a downtrend. In the short run, I see no reason to get aggressive here. We're still kind of flirting with this overhead band of resistance, and tried to break above it on Monday, but did not hold it. So I would not be surprised if we see some backing and filling here. The question is going to be, if we pull back, do we get a deep retracement or a shallow retracement? The depth of the retracement tells you something about how strong this market is. But for now, I think it's chill out with bull trades for a minute.
Mm-hmm. Give me the hourly chart if you can there, Tyler. I think it's really interesting, the last 4 bars that have developed. And obviously on the daily, if these things don't hold, you've got some potential for a little bit of a pullback here. And it could even, you never know with markets, obviously, that could turn into a little bit of a deeper pullback to those MAs. But I am seeing this hourly in slightly a different way, because we had the gap out on Monday. and I don't really take that wick that was on the daily chart too seriously, quite frankly. Maybe technicians will, maybe algorithms will, Mark. I'm not certain about that. From a pricing standpoint, though, it just didn't feel real when we were up 5% at the first 5 minutes of the day, right? It backfilled, then we found some support Tuesday. And if you think about it, we've really been sideways now for 3 days, where the market has been chopping back and forth, chopping back and forth. How do you marry intraday analysis when it's, painting you a certain picture, and we're selling off here in the last 20 minutes, a few points. But I see support here, Tyler, and I see a consolidation. Is the intraday painting a different picture for you than the daily is, or are they complementing each other?
Well, I mean, I like the phrase anticipate all potential scenarios, right? So I was emphasizing if this weakness gives way to a bigger retracement. Obviously, we don't know. I mean, anytime you encounter resistance, you're going to get some type of correction. It could be a time correction and we pause or build a base. It could be a price correction. You take it a bar at a time. But I'm not necessarily saying, hey, this is going to be a 3-bar retracement. I'm just saying it's coming into resistance. You have 2 potential scenarios. Best case, it pauses for a few days, then you get a breakout. Worst case, you get a retracement. But yeah, the daily does, or the intraday certainly does give you a little more clarity. So always a wise idea or good practice to look intraday and see if it gives you a little different view.
Mm-hmm. Flash through the 4 different indexes if you can for me, Tyler, and just tell me if you're seeing anything different from a relative strength or weakness perspective. The NASDAQ, the RUT, and the Dow.
Yeah, I mean, the first thing would be, if you want to look at relative strength versus weakness, just anchor on this negative 0.83 in your mind for a second. And as we burn through the other charts, if one is down 1.5% or one is up, then that obviously, if you're comparing it to the S&P, will give you your answer for if it's exhibiting relative strength. So you take a look at the NASDAQ, this is only down 0.2. And so today you're seeing a little bit of strength out of the NASDAQ, which I think is a continuation of yesterday. Remember, growth stocks got demolished on Monday and Tuesday on a relative basis, and probably a little too much. And so I think yesterday you saw a little bit of a correction where growth stocks came back a bit. And now you got just a little mini me candle here. So I don't read into small bodied candles like this. It's just noise. I guess in the very short run, it's nice that the growth is holding up a little bit. 0.3 is nothing, right? This is just noise. If you're trying to divine the near-term future out of this little mini bar, I think it's going to be an exercise of frustration, Tim. But the key for me is that the NASDAQ held the 50-day moving average and bounced where it needed to, right? So buyers came in to defend the NASDAQ, to defend growth stocks where they needed to prevent a bigger breakdown. And right now it's just hanging out, it's just hanging out, and looks like a pause day to me.
Marky, how are you reading price action, especially regarding tech and the NASDAQ relative to pretty much everything else? I mean, what are you seeing right now in these indexes?
I mean, this week has been a classic. This has been from an algo headline price movement standpoint. I don't have anything to add on technicals. Tyler was ace on that. But if you remember back in June and May and July, we got an absolute clinic on how algos move headlines on price action. We know what groups of stocks move, and this week has just been that. There has been, obviously, we got an amplified version of it on Monday. Vaccine out, right? So stay-at-home stocks get crushed, tech stocks go down, gold goes down, oil's up, movie theaters, cruise lines, value stocks up. And we saw that at the first of the week. And then when they get negative COVID headlines, like we've seen the last few days, especially with them overextended, you get a sell-off, you get a rotation back. And I mentioned the other day when I was on the halftime report, the cumulative effect of all of this in May, June, and July was it would lift up. On positive economy reopening vaccine days, value up, epicenter stocks up, tech down. And then on vice versa days, tech's up. But the value wouldn't go down as much as they went up on the reopening days. And so you have this cumulative effect of everything slowly gets lifted over time. The big problem I see right now with the market is there's not a theme, right? And we're going to get into COVID headlines. We're going to get into stimulus headlines. We're going to get into Jay Powell headlines here in a minute. But what is the sustainable theme right now? What is it? There isn't one. There's attempts. Like last week, it was more QE, great for tech stocks. Mm-hmm. This week, it's rotation to value. But like, where's the sustainable theme? There isn't one right now. I think that's a problem.
Yeah, and I think the market is waiting and trying to figure out, how we start that conversation moving forward. Mark, there's still concerning data around COVID. There's still a lack of clarity about stimulus. I saw some some comments out of Mitch McConnell even today, and Schumer as well, Senator Schumer as well, talking about where they're not on the same page. We'll go through some of that. So I think the market is trying to find a theme, and currently, quite frankly, the theme in my head this week has been COVID, and it is this current stretch and period of the data with COVID that we're watching that is concerning me. I'm seeing actions being taken. And if that starts to develop into a theme, Mark, that's not necessarily good for the bulls. The vaccine development, we did get some more positive news around that today. I think Moderna actually, give me mRNA if you can here, Tyler, and we'll talk COVID for just a minute. Moderna was up earlier this morning, and it is actually holding that game because they were talking about their data around their coronavirus vaccine trial, that they have enough data to publish it. They're going to publish it very soon. And Mark, this is how silly this is. Even before they published the data, the fact they even just announced that, the stock bumped up 5%.
It's the algos, right? Yeah. So I mean, you have to get out of your head that this is investors. This is algorithmic trading when these news headlines occur.
Mm-hmm. Mm-hmm. Can I be a nerd real quick?
Yeah.
So Moderna has a really cool stock ticker symbol because mRNA in chemistry and genetics is messenger RNA. It's how gene sequencing and stuff is done, and that's what they focus in. So I think it's really cool that that's their ticker symbol, and they know that because they focus in on gene sequencing, and messenger RNA is used within cells to rebuild DNA. I think it's cool. I'm a nerd.
I have watched Moderna for 15 years in different forms and fashion. Cody, I had never put that together. Yep. So I'm glad you dropped that little quiz item in there. That's kind of cool. That's a cool little tidbit on a Thursday, Tyler, to know that. I like it. Mark, give us the update on COVID. I talked about some of the data yesterday, what New Jersey had been doing, Utah, some of the data in certain states, hospitalization rates and whatnot. So you can give us any information you want to, but, kind of just talk a little bit about COVID right now, what you're seeing, what you're considering, and, what is the market watching?
I mean, world saw a record daily COVID-19 deaths yesterday. U.S. cases over 100,000 for a lot of days in a row. Lockdowns in Europe. Biden's science advisor calling for a 4 to 6 week potential national lockdown to avoid COVID hell. Sebastian McKay, a fund manager at Invesco, said people are waking up to the reality of how long it will take to roll out a vaccine. I'm not a medical expert. How many times have we used that phrase this year? I'm not an epidemiologist. I'm not a medical expert, but here is my opinion on the matter anyway. Like, seriously, I've used it. I think we've all used it a lot. But he says it seems unlikely we're going to have a quickly revert to the pre-COVID world. Headlines today. Stocks open mostly lower as coronavirus concerns weigh. You have right now, and what's funny is that none of this is any different than it's been, but the market is waking up. It's like, all right, so we're going to have a vaccine one day. We all believe that, right? At least most people believe that, especially the investing community definitely believes that. But that day is in the future. And we're going to have a lot of terrible COVID in between now and then. So where should I put my money? Right? Because if we have a vaccine and things return to normal, everybody recognizes value is the place to go. It's depressed. Even companies like Prudential and Budweiser and some of your good dividend stocks, definitely the epicenter stocks. If you knew that the world was going to return and be back to normal next July, it would be easy to wait that out. You're like, yep, I'm going to do that. Everybody knows that. We're all playing by the same playbook here. Mm-hmm. But we also know that We're heading into winter. I mean, the data right now already is terrible. I mean, we're at record highs on the world. We're at record highs in cases here in the United States. We're hitting the peak in hospitalization. So how do you balance this equation from an investing long-term point of view? And that's the battle. The short term, the headlines are going to be really, really nasty with COVID. They're going to continue to be really, really nasty. We also know that there's a vaccine one day. And so how do you balance that as an investor on what weighs on sentiment? Where do you put your money? Where and when and if this true rotation comes? Because as soon as it is believed that we are going to be around the corner and that a normal way of life is upon us, the rotation is going to be fierce. I mean, we saw the taste of that on Monday. We saw the taste of it on Monday. But can that sustain itself for the next 2, 4, 6 months of what is likely to be a really bleak winter with regards to COVID? The headlines are only going to get worse.
Mhm.
And so, like, what do you do with your view of the rotation? You know, what do you do? I mean, it's just, I mean, that's the question. I think that's the $1 million question this week right now.
Mhm.
So,
Well, and the conversation around COVID is affecting this value versus growth rotation, obviously, because certain segments of the market are going to go up based on the idea of a true vaccine and a reopening theme and all that kind of stuff. That's why we popped on Monday. And other segments of the market can probably perform even if we don't. I mean, we saw the stay-at-home type stocks market do really well this year amidst, obviously a lot of concerning COVID stuff. So where the market moves is going to be an important part based on the nature of this conversation. There's a couple of things that you brought up. I do want to kind of talk about a little bit there. I think his name is Michael Osterholm. It's the guy that President-elect Joe Biden is going to appoint to the task force. Is that who it is, Mark?
I don't know the gentleman's name.
So my take on his thing about we might have like a 4 to 6 week, period of kind of restrictions. I don't know if he used the word lockdown. I think it might be a negotiating play for stimulus, because direct quote from him today, we could pay for a package right now to cover all the lost wages and individual workers for losses to small companies to medium-sized companies. So he was saying that in the context of, if you guys give us money, we can take stark action, right? If you do have a stimulus plan, then we could do some things to combat this COVID stuff. I obviously they are taking it very seriously, and they're looking for this period here to do something about it. The other thing is, I think this.
Well, and just on the stimulus.
Go ahead.
Oh, I was just going to say, if you give me money, I can fix all your problems too.
There you
Give
go.
me a lot of money and I can fix all your problems. I
From
promise.
an investing long-term position trading point of view, I think we have to wake up to the fact that Mitch McConnell is going to be Mitch McConnell. I think his statement today on the Senate floor, listen, I don't care, play nice, whatever. This is who Mitch McConnell is, and to say otherwise is just ignoring reality. I spoke in the Senate today, and he said, while there should be another fiscal stimulus package, he said he is not interested in a dramatic larger stimulus package. That's who Mitch McConnell is. That is who he's going to be in these negotiations. Republicans are most likely, although we don't know for sure with the Georgia Senate races in January, going to control the Senate.
Mm-hmm.
The robust stimulus packages like we were talking a few weeks in the 1.5 to 2 trillion range, I think it's a fantasy pipe dream. And so I think the market moving forward, you're going to have COVID. You're not going to have a large stimulus package. The Fed hasn't said they're going to do more QE. Where's your theme? Where's your excitement? Where's your let's smash the buy button? That's what's weighing on mine. What is the theme? What is the sentiment? What is the whatever to get people excited about stocks to send it that next leg lower?
Mm-hmm.
Any ideas?
Tyler, what about you? What's going to make you want to come in and buy these markets at this level outside of, just a pure technical setup, because we don't have one yet. What's your take on this?
Oh, man, I'm just going to trade what the chart tells me to trade. I don't know all about that mumbo jumbo. If the chart looks good, I'm going to buy it. If it doesn't look good, I won't add risk.
Mm-hmm.
Next question.
So,
Tim, you asked a pure technician.
Well, what does it mean?
What would it take outside of a signal?
I'm not talking trading, Tyler. I'm talking investing and putting new capital to work. So I'm not saying when would you put more money into the market as a trade to try to catch a Christmas rally or something like that. When do you just believe in stocks at deeper levels no matter what? I know you would if you got a deep correction, but I'm not talking about that. What would it take for you to put more money to work like here at these levels and believe in it for a long-term, kind of period?
I already do.
You already do it anyway.
Mm-hmm.
You just believe in equities. Yeah. Yeah. And I think a lot of investors are like that, Mark. And even on Wall Street, I think you're going to have people continually put money in the market. If you don't get severe legs down, the theme might just emerge itself. Christmas rally, we're moving forward, things clarify themselves a little bit. It's not there today. And this week is a little bit of back and forth in this consolidation. It's not economics. I'll tell you that, Mark. I mean, we got more economic data today. CPI and core CPI came in at 0%, disinflation against the 1%, 0.1% that they were expecting to rise. Jobs data came in, but it didn't even move the needle for me in the market. So I don't think it's going to be economic data in the short term. It's going to be interesting to watch. The theme that was emerging,
but
Tyler,
here's the problem. This is what I'm going to say about all this mumbo jumbo. Over the last 2 months, individuals buying technical signals on anything other than really short-term swing trades on that broad market, they have not been rewarded because there hasn't been a sustained theme.
Well, so the hard thing for me is if I say I'm going to wait until everything that could hurt the market goes away, I'll effectively never invest, right? So the phrase is the market climbs a wall of worry, and it's very challenging to say. I don't know how I would trade around a theme. Like I don't know what that would look like. If I say I got to wait for the headlines to say XYZ, then I'll buy. It's too fickle for me, and so I just don't know how I would create a system around that. That's the challenge for me.
No, and it's hard to trade it. I mean, because it's not a system. I mean, because I respect that totally because you're a system-based thing, and like there isn't a quantifiable 2 + 2. This is a theme, like trade it around because it's so much qualitative analysis, right? I mean, this is where technicians have an advantage, is because technicians say, this is my system, this is how I do it, here's the math, and qualitative analysis is, well, I mean, it has no part or say in it. But it's qualitative analysis and trying to judge a theme, I think is amazing when you're right. Now you regret it when you're wrong, right? But it doesn't stop you from investing. It just keeps the reins on being irresponsible, I guess, about being cautious. It probably means if you buy qualitative analysis that there isn't a theme and that there's some downside maybe in the short term, it just keeps more cash in hand. I mean, you can always sell naked puts, right? You can always do things that would buy at lower levels, because I'm a perma bull like you. Qualitative analysis is my primary. Second, technical analysis is my secondary. And for you, technical analysis is 1, 2, and 3. Is that right?
Yeah.
Yeah. So, I mean, it's just approaches to the market. I mean, you got to find your way of approaching the market.
Mm-hmm. Well, outside of the broad markets, though, I think one thing that a lot of people do when they can't find what they're looking for in just the S&P and smash the buy button is they go down to individual sectors or individual stocks. One of the things that we've been talking about over the last couple of weeks is certain areas of the market starting to pop up a little bit. Tyler, do me a quick little rapid fire exercise and go through the sectors real quick and just tell me if you're seeing what that rotation might be developing into and what you're seeing from these different sectors, if you can.
Yeah. So, I mean, one way to have spotted the rotation, all it means is beaten down sectors really outperformed early in the week. And the sectors that have been doing really well did not. Anybody who owns tech stocks knows they weren't partying on Monday and Tuesday. They're like, vaccine what? This is killing me. I own Zoom and I own, tech stocks. So the gains were not equitable. It was certain areas that went crazy. And so energy is a good example. Energy has been beaten down. These are value stocks because they're certainly not growth stocks. It's not like they're trading at really, really high multiples. The part with energy, though, is I'm probably the least trustful I feel like the Mark Twain quote about the cat sitting on a hot stove, right? If he sits on the hot stove, he's not going to sit on a hot stove again, but neither will he sit on a cold stove, something like that. I feel like energy's been beaten down so much that it's going to take a bit for me to warm up to this sector. But in the short run, it is an uptrend, right? I mean, so you had energy wake up, short-term trend changed in energy. Discretionary stocks were already doing okay, but that gap up got hammered. So that really hasn't been leading this week. Utilities probably market perform on this one. Nothing too substantial. Industrials holding up quite well after that gap. Those are a leader, I think, right now. Consumer staples. I fall asleep before I get done analyzing consumer staples usually, but got a little breakout there. They're whatever. Financials to me are the big one, Tim. These had a really big awakening on Monday. Enough so that the risk reward was really tricky to justify chasing that thing. This might be the most interesting area for me, this and small caps for buying the dip, because it went up so much. You had so much accumulation. This is a layup bull retracement if you get another down bar. The question's going to be whether we give it all back or we find a pivot, before you fill the gap. But financials, energy, small caps, those would be the three areas / sectors that
Stay on that for a second though, because regardless of that, the market, the charts will determine that part. That's not our job to determine, but either of those signals is a good signal, in my opinion. Whatever happens, if you get a little pivot point at those old resistance levels around 25 and a half, I'm good with that. If you fill the whole gap, I'm good with that as well. But either one of those signals, I think, would be a bullish entry point. Do you agree with that?
100%. 100%. Yep. Yeah, and this is healthy, right? I mean, it's not a bad thing if these areas that have gone crazy to the upside chill out for a little bit. I mean, they were getting to crazy valuations anyways. And so for them to pass the baton to other areas and get a broadening of the market rally ultimately is a healthy development. But, are you mad that financials are breathing a little bit? No. I mean, they just went up so much in 2 weeks that it was a tough chase there anyways. Even if you liked financials, you probably wanted some backing and filling. So this I foresee, tomorrow, scouting reports, give us another red bar. I'm sure we'll have plenty of potential setups in this space. Just to round out the sectors, technology, whatever. I mean, here's the rotation we're talking about. Those got punched in the face on the up gap on Monday, nasty bar on Tuesday, trying to find their footing, but it's just messy. You're not really seeing any trade worthy patterns in the tech sector right now. Healthcare, basically where it was a week ago. Still a nice uptrend, but messy. And this is the thing we'll talk about here in a minute, but everything was messy after Monday. Monday threw an entire wrench into every single chart, and essentially invalidated many of the setups coming into the week. Now you're just waiting for the next pattern, and maybe it takes 4, 5, 6 bars before you finally get a tradable setup. That's fine. And so it's ironic that you have this mass awakening in value stocks and this big rush on Monday. And it's like, okay, what's the trade? And the trade was go back on Friday and buy crap. I mean, because since Monday, there really hasn't been an easy trade from a directional standpoint. So great for existing positions, challenging for new stuff. Final one, basic materials. That's a good little pullback. So again, far from hating this weakness. I think you embrace it because on the tail end of it or on the back side of it, you've got some good bull patterns here.
Yeah. And even that one right there is kind of highlighting where my head is right now. The gap up probably wasn't sustainable. It wasn't obviously here in the short term. Markets are digesting some of that price. And now we're in this wait and see mode to see how these retracements develop. And they're not there yet. They're not at buy points yet. They're all on a downward red candle here today. So we're going to be watching those bar by bar by bar as they develop. All right, let's keep moving through the markets here, guys. Let's talk crude oil if we can. And by the way, thank you for that breakdown, both of you guys, on the sentiment and the charts there. Crude oil next here. Tyler, stuck in the mud. I don't see anything. In fact, I see an expanding range where it failed on a breakdown. Now it's rallied all the way back up. Who knows where these, support and resistances are. But the reality is I still see neutral. What about you?
I mean, it's still neutral overall. You got to admit it's more constructive now than it was a week ago. Moving averages don't matter as much when you're in a range, but you are above the moving averages. You are at the upper end of the range. Again, I go back to the cat and the stove. It's so hard to trust this stuff because even if oil does start to look a little more constructive, it's got to spill into the energy stocks, and they look a little better now, but I don't know. It's just been so long since you've been getting paid for bottom fishing and energy. I'm just a little indifferent to the sector right now.
Mark, anything in crude oil that's grabbing your attention? I saw OPEC cut their forecast yesterday and whatnot. I still have my concerns long-term as well. And Tyler, that quote from Mark Twain, where when you're talking about energy, if a cat sits on a hot stove, that cat won't sit on a hot stove again. That cat won't sit on a cold stove either. That cat just don't like stoves, which I had never heard that quote, but I do like that. Mark, any read on crude oil here?
Crude oil is the same thing from the big picture. Until you get a real reopening, there isn't a sustainable catalyst to the upside. I've been saying this for 2.5 months, and nothing changes today. And you're heading into a COVID winter with the headlines you're seeing with lockdowns in Europe. Where's the sustainable move to the upside? There isn't one.
Yeah,
there just isn't.
Yeah, I do agree, Tyler. You have to admit a little bit more constructive if you are a bull or looking for upward prices. You have to like the last couple of weeks, no question. I'm still neutral, and I don't see a theme behind it yet. We'll keep watching that one. Gold next, if we can. Stick and support the last few days. It had that sell-off on Monday. We've analyzed it quite in depth here this week. Tyler, just anything on the chart there that grabbing your attention?
I mean, from a bullish perspective, you got to be pleased that it did hold support, right? However, a low base doesn't exactly get the juice flowing. It's like it makes you wonder if it's just digesting the down move and then it's going to break down, right? So I'm happy it's holding up, but we have not negated that big red bar yet, right? Like that failed breakout that was so beautiful coming into this week is still in play. You're basing its support stable, yes. Bullish, not really.
Mm-hmm. And Mark, here I get the next one I got might be the theme that you're looking for. How about stocks, shed stocks right now and just focus on cryptocurrencies? Bitcoin next here, Tyler, if we can. Mark, the most bullish area of the market has been Bitcoin the last 6 weeks. You know, it's incredible when you look at it. We're now up pushing this 16,000 level. I'll get Mark's read just on the top and the nature of momentum and what he expects here from crypto. Tyler, this is a level we've been watching for technically for quite some time. In fact, if you back this out, you'll notice that 16K was, old historical level as well. And yep, right back in that period. And it's something that crypto guys have been watching for, waiting for some time. What's your read on this thing technically?
Is this when futures first started trading?
It is.
Yes.
Mm-hmm.
So 16, I mean, that's just you.
They picked a great week to start trading, right?
The irony is thick on that for sure. But I mean, it's impressive, right? I mean, this thing got demolished, and rather than it being the end of crypto, it was just, it was a bubble bursting, and now you're more sustainable. Look, it's impressive. It just makes me more mad that we don't have a freaking ETF. It just makes me mad. Mm-hmm. There's nothing bearish about this. It's very, very strong. And, while gold took a breather, Bitcoin kept ripping. So I think it's flexing its muscles when other currency alternatives got whacked a little bit. I think it makes you like it even more in the short run. Nothing to see here other than bullishness. I mean, it is a little bit extended, but has that ever mattered for Bitcoin? Probably not. So I like it.
Mm-hmm. Here's the thing with Bitcoin, and I've been tracking Bitcoin now for about 7 years. Obviously, this is something that has been on my radar for a long time. I'm a huge Bitcoin bull, been that way for a long time. Mark, you've been calling for a blow off top here in Bitcoin, some very bullish activity through most of this year, quite frankly, and it's been developing in that way. Bitcoin doesn't always trade in the same relation to the market as people might think. It will go through stretches for a month or two where it's correlated to stocks, where it feels like when you have a sell-off day in stocks, people sell Bitcoin. But then it will go through stretches like this, Mark, where it has no correlation to the stock market. I mean, it's up here today. If you think about it, we've been up now for 6 weeks as the market has gone wildly up, wildly down, wildly
Well,
back up.
yeah,
Bitcoin keeps running.
and that is an excellent observation. And and once again, this is one of the because there are stretches where it is just feels like the market. But and this is the one thing about qualitative analysis is there were 4 or 5 identifiable true catalyst things about 5-6 weeks ago that started happening. The Square news, the PayPal news, and it built a surge of momentum. And then you had several reputable, the JP Morgans and such, give these really, really nice Bitcoin projections. And it really provided a nice sentiment backdrop. And then it's all been technicals from there. And so it really helps separate from the market based on these true genuine catalysts. And then and then technicals have just taken over the last 3.5 weeks or so.
Mhm.
So in the short term, it's all there. It has the Robinhood class excited about it. It has institutional class excited about it. In the short term, it's looking really beautiful. I saw a quote today, though, from Ray Dalio, who poo-pooing on Bitcoin. And this has always been my big picture, long term, that has separated you and me. Short term, still love us. Still think we are in the midst of a semi blow off top. But Ray Dalio says that he doesn't, if cryptocurrencies see any real growth where they get too high, he just cannot see digital currencies succeeding because authorities will clamp down on them, basically eliminating them, put the power of the state against them. And that's always been my big fear long term, that if Bitcoin were to go to 30,000, right, to 40,000, whatever, that the federal authorities come in and go, boom, no more.
What if all these big corporations embrace it? They got lobbies. They give to government officials. I mean, if you get the embracing by big global corporations, would that not decrease the likelihood that the government comes in and squashes it?
100%, Tyler, it would, in my opinion. If you have mass adoption between multinational corporations that go across country borders, Mark, and we already have that, by the way. You mentioned the PayPal news. You mentioned the news. What was the other company? I believe recently Square. Square News. Yeah. Corporations are going to continue to adopt crypto and these technologies behind it. It is, Mark, that's been a conversation around cryptocurrency for 11 years. And it's always been the fear, that somehow.
That's always in the back of my head been the reason, until recently, because recently it was just a reading the environment why I got so excited about Bitcoin in the short term. I still don't have any fundamental belief. But back in the day, as in just a year ago, right? That was always the thing hanging over my head. I was just how can it ever succeed? Because if it ever succeeds too much, then the powers that, because I'm an institutional guy. It's why I'm a perma bull, albeit at conservative levels, is because I believe in the power of the state, and not in institutional bet on the house kind of guy. And so because you are the true believer in Bitcoin long term. I'm just on the ride, make a few bucks right now.
Well, because the movement's not just about Bitcoin, it's also about all of the other coins and the technology behind it, including processing transaction and working on the blockchain, which are things that multinational corporations and governments are introducing into all kinds of different forms and facets of life, not just payment, Mark. Bitcoin's evolved into something where it's not just some storage of value. It's got all these different themes behind it and uses behind it, quite frankly. And it's not just Bitcoin that have to outlaw. They'd have to outlaw all cryptocurrencies, all digital payment currencies. I understand the concern when you think about big government coming in and wanting to control power. But I think what's going to end up happening, Mark, is they'll just end up adopting it and co-opting it within the goals they have themselves, which is something that they've already started to do in many different forms, by the way. Many government institutions own a lot of Bitcoin. They seized it over the years, Mark. And so it's that's an interesting idea. I think it's just I understand why Ray Dalio, because he's not been a Bitcoin guy, why Ray Dalio would point out a concern, but it's not a tangible one in the short term that you can point your finger to and say, that's why crypto is going to get derailed. That's just a hypothetical one that would, kind of panic somebody that I don't think is worth, kind of building a thesis around, quite frankly.
I mean,
Yeah.
Rufio.
hey, listen, I'm going to make my money on this and run.
I know how you're approaching it.
And then if it ever dips again, I'll get in. Because I'm a dipper. Like when things get extended like this, I'm going to make my money run, and then I'll revisit if crypto crashes again.
Yeah. Yeah.
Tim, did you get that reference?
I did. Yes, I did.
What was it?
Rufio.
Explain it to Mark.
Explain it to me.
Hook with oh crap, what's his name? Who played Peter Pan?
Robin Williams.
Robin Williams. Hook with Robin Williams, right? He's getting into that fight with Rufio. They're throwing insults. Anyways.
It was
All
a
right.
dad reference for sure. Very good movie. Robin Williams is one of my favorite actors.
You
of all
are so
time.
from Provo County.
It's true.
Oh, what? Hook is a good
It's a
movie,
good movie.
for anybody.
I liked it too. I enjoyed it.
Classic.
All right, let's keep talking here, guys. Actually, let's transition into stock talk. And there's several things I want to do today. One thing, you know, Tyler, when I knew you were coming on the show, and you did the option report over the weekend, you do the option report quite often. Actually, I'd say most weekends, 3 or 4 out of the month at least. If you don't got something going on, and you do a great job with it. Team Tackle understands it. They appreciate it. We get a lot of good feedback of it. This last weekend was a unique report in a couple of regards. Number one, I thought there was a lot of great setups, but those short-term swing setups got blown up right quick and in a hurry in many regards. I went through the option report today, and I still like a lot of these charts, but now they're very different charts. Dow, GE, HCA, Taiwan Semiconductor. Can you take a minute and kind of go through some of the stocks we had over the last weekend and talk a little bit about how to update watch list and triggers on companies that maybe didn't give you the entry that you were looking for, but they might still be on your radar? And we can start with any of them: Dow, you know, GE, HCA, any of them if you can.
Yeah, and if I could just put in a plug real quick. On Monday, first of all, on Monday in the Traders Lounge, Monday morning, right when the market opened, this was a discussion we had in the lounge. I also wrote about it in Monday's Tales of a Technician blog, the Monster Gap playbook. You know, what do you do when the market opens way higher, right? As you said, immediately just torching some of those setups. So this has obviously been on everybody's mind this week. And the thing you have to realize is this very rarely happens. And so it's challenging when you're talking about trading and everything. In one discussion, you just cannot put in all the nuances and all the rare events and, you know, the little things that you have to tweak when rare things happen. So this does give us the opportunity to bring up something that, you know, usually you don't have to worry about this, right? But the market opens up, you know, 3, 4, 5% on Monday, and immediately these bullish stocks that had quality setups, like take a GE, for instance, you know, we liked this bottoming action in GE. We liked this as a breakout candidate coming into this week. It was bumping up against $8 resistance. It's like, look, I like it on Monday if it takes out, you know, Friday or the prior week's high. And immediately GE goes from $8 to $9.30. I mean, what is that, Tim? $1.30 on an $8 stock. GE was up 16% on Monday morning. What are you going to do? I mean, that pattern, the original idea is shot, right? So there's 2 takeaways. Number one, and I mentioned this in the blog and on the lounge, when the market gaps up like this, if you have preset orders like that are going to trigger market orders, if GE goes above $8, like a buy stop if you're a stock trader, or for an option trader, a conditional or contingent order where you're going to buy a call option if the stock goes above $8. You do not want those orders triggering on the morning of a massive gap, right? So just a best practice, if you know you're going to trigger some orders and the market's opening way higher or way lower than you originally planned on, maybe a good idea to cancel those and reassess after the open.
Well, and let me talk to that for 1 second, because
Sure.
I understand this from an education standpoint. I've been a mentor for a long time, so I know not everybody has this skill set yet, but I'm going to talk to Team Tackle out there. If you're a veteran trader and you still don't know how to use the buy stop limit or contingent to limit entries to make sure you don't pay some exorbitant price on a gap, you need to put some time in to learn that. because it gives you more control as a trader to be able to set what your fill prices are, right?
Sounds like a nice topic for a coach's show.
It would be a wonderful topic, you know,
I feel
learning
like
how
that's
to learning
an
how to do
advanced type system for our pro members to really understand those. I think that sounds like a fantastic topic there, Tim.
because you shouldn't be paying market price on a gap day like that, Tyler, if you understand how to use the order correctly, right?
Right. Well, and look, I mean, where everybody's cheering mid-morning, you're crying because you bought the high of the day and you're like screwed. So it's something, Tim, that once it happens to you once, you're like, all right, I'm adapting. I'm changing my tactics. I don't want this to happen again. So, but it's tough because it's rare. Maybe it happens once a year, once every couple of years. And so you forget about it until it happens. And so it is good to have those tactics for sure.
Mm-hmm.
So what do you do? Like let's say GE is representative of every stock on the watch list. Well, essentially you have to wait for the next setup, right? It is as if you have to wipe the slate clean if it gaps this much and say, okay, wish I would have bought GE last week, but the setup going into this week is shot. Now I'm waiting to see if it will pause or pull back and give me another retracement or another breakout. Because if these were good companies and good trends, just because I missed the current pattern doesn't mean there's not another one coming around the corner. So the best way to handle this is to keep it on the radar, check in every day or every few days and see if it sets up again. So in the case of GE, what makes it interesting is you now essentially have paused for 4 bars. You've digested some of the gain. This, Tim, is a little bit messy. Maybe this morphs into a bigger retracement. But it's in play. I mean, I don't know that it's set up for a trade right this second, but it could be forming. It could be forming a pattern.
Mm-hmm.
So we'll look at it chart by chart, but fundamentally, you wait for the next setup. If the trend is still intact, and Tim, maybe this entire week you're like, I didn't do any swing trades this week.
Mm-hmm.
Fine, I'm better than getting forced into stuff on Monday and losing into the weekend.
Mm-hmm. What about Dow? I found several interesting ones grab my attention. I wanted to talk about. I know none of these are really today entry points, and that has to be said. We got a market down day as swing traders. If that's the way you're approaching the market, you got to have things line up. You have to have your confirmation point. You have to have good reward to risk and all that kind of stuff. We came into the week looking for a breakout on Dow. It broke out with the market gap. Now we've backfilled into some old zones that are now interesting, in my opinion. Tyler, would you keep this on your watch list and keep waiting for something here?
Yeah, and you mean DuPont.
Or DuPont, yeah.
Yeah. So, I mean, here's the thing. In an ideal world, this would have broken out, pulled back to the breakout point and bounced. So it did show maybe a tiny bit more weakness than you wanted to because it broke back below the breakout point. But now is it maybe a pullback, a bull retracement? It made a higher high. If it bounces above the 20 or 50-day moving average, maybe it's just a retracement and you buy the bounce. As long as it stays above the 50-day, Tim, $58, I think it's still in play as a potential retracement. You look at the daily bars, lower daily low, lower daily low, lower daily low, lower high, lower high, lower high. The sequence right now is down. You want to wait till it pivots and starts to turn up. And so right now you're watching today's high, but I think it improves a little bit. If you give me maybe a doji candle on Friday, I like it even better. I would say this is still in play. Yes. As long as it stays above 58.
Mm-hmm. What about a Taiwan Semiconductor who, I'm a fundamental believer in this company. I love what they do. This one was different though. We were watching for a breakout. When it broke out and pulled back, it now has violated its breakout point. So you have a failed breakout.
Yeah.
So a little different pattern here. Do you take it off a short-term watch list? Do you wait for that thing to consolidate for a while? How do you treat this one?
When I get a failed breakout, I'm not going to buy the dip, first of all, because it just showed it should have broken out and stuck. The fact that it didn't and pulled back immediately, it kind of gives me a yellow light. So if I'm going to warm up to this again, it's got to break out anew. And so I would basically say, come back up to the breakout area, and quite frankly, you might just take it over Monday's high. So that's where it failed on Monday. If it can show me it's got the strength to get above Monday's high, that'll be, the second breakout attempt. And that would be enough bullish, I think, evidence to pull the trigger. That'd be my level.
Two more for me from the watch list over the weekend. Planet Fitness was on the stock report, but very similar. And one I've been watching, talking about this week. This one had a huge gap up in theme with what happened on Monday. These kind of companies were running. I mean, Tyler, it gapped from what, $70 all the way into the high 80s at one point Monday. Now we've pulled back and kind of digested all of that. Not quite all of it yet, though, because haven't really filled the gap yet. I mean, how do you start watching this one?
This is a good case study because I don't want to say every, but almost every reopening stock looks like this. The airlines, the casinos, Lyft, Uber, they all just gapped
like
way too far. And you wouldn't have wanted to have bought them on Monday anyways. So the pullback is a welcome development, right? You got your pick of the litter in this space. I would compare Planet Fitness to every other one of those I just mentioned and anybody who's in the reopening. And fundamentally, you have a choice here. It's like, do I believe that this breakout is legit, that this strength will continue, that buyers will emerge and support this new uptrend? It's a bad look, man, if this fills the gap and keeps going. Like, that's going to look ugly and really be pretty sharp rejection of the whole thesis that, hey, these guys are going to be good winners from here on out. I don't think you want to see more than a gap fill here. Bulls better step up and defend this when it fills the gap. Otherwise, it's just this massive missed opportunity. The risk reward will be very compelling. Maybe it bounces tomorrow. I don't know. I wouldn't mind another down bar, but I think all of these are potential buys into weakness.
Well, I mean, what we know about Alco, because the epicenter stocks is something I probably followed closer than any other area of the market. And when we had the reopening in June, you had several sustained runs for a few days. And then what happened to all of them? Slid back down when there was lack of continued. Is there going to be a vaccine news next Wednesday? I mean, this was the game we played because I mean, Epicenter's been, I mean, it has literally been what I've traded this year for the most part. And back in the summer, it was like, all right, do we get vaccine news to stop this slide? I mean, that was the thing. And then no vaccine news would come, no vaccine news would come. How I'm playing this area of the market is if we get those deep pullbacks into real good value levels, then I'm a buyer again. Because for the same reasons I have been all year, because eventually we will get a vaccine. I'm getting a much cheaper price, and eventually I'll get a vaccine news clear out day like we had on Monday. I mean, Monday cleared everything out for me, and now I can start the game again. And so naked puts at lower levels, if you get a deeper pullback, I think you just do it again.
And you got to believe that if short sellers weren't scared before, they're sure as heck scared now, right? Because it's like, well, let's see. I mean, I know that Planet Fitness gaps up 20% on vaccine news. You want to be on the wrong side of that when you're short?
Yeah,
no.
And that's an excellent point. And that might, I mean, I'm more confident if it gets down into these ranges again. I mean, pull up any chart, Carnival, and airline, just pull any of them up. Like if we get down to those bottoms again, then I think it's an excellent point. One, short sellers, I mean, how do they keep on pounding it the lower it goes, knowing that they can get blown out?
Especially this far into it, right? Like this, we're at the point where you've got the evidence on the vaccine stuff. Now it's not a matter of if, it's a matter of when. And that's, I would keep me up at night if I was short a bunch of these types of stocks.
And so it's one thing to short it up top or when it's higher. When it gets down to the bottom, I think you see a lot of profit taking on short selling. And once again, I really love it again, and I'll keep on doing it. You get to these bottom of these ranges, I'll institute my epicenter plan.
Yeah.
So
that one's brutal. See, this is going to be the game here, obviously, over the next couple of weeks for traders, is taking your pick of the litter, right? And it depends on what you want. For anybody who's trading swing trading momentum, Mark, they don't want to see it come all the way to lows. Maybe bottom fishers would, right? So it's going to be based on the trader. But for a win here, I mean, maybe the 200 MA comes into play here, $80 on the old pivot. But that one is a sharp sell-off off of those highs.
No, and it's, I mean, all of these things are going to be relative, but they're all going to trade generally in the same direction. It's just with what velocity And it will be really fascinating. And this is the battle. And Tyler pointed to this from a technical standpoint. Does it come down and pivot? Does it come down? Does MGM, does any of these stocks, do they come down and catch that rising moving average? Do they come down at the old breakout level and catch it, and old resistance becomes new support? I mean, that's going to be the real telling battle for me. And I might trade that actually if you have that. And it's been a long time since I've said that about an epicenter stock. But I mean, you have a technical pivot, catch moving average battle coming up in the coming days, and it's going to be really interesting how it responds. And I have a feeling that they're all going to catch it, or none of them are.
Mhm.
Well, and you have, I mean, you can choose something that's a little more volatile, like one of these casinos or a Planet Fitness, but you could also take the less volatile route and say, I'll play a basket of banks or something, right?
And Tyler, for me, that is Morgan Stanley for me. Has traded, been depressed. It's a company whose earnings report I've just absolutely. They've had amazing earnings reports.
Yeah.
I think it's a cheap stock from a value perspective. I've been talking about Morgan Stanley for about a month now, how much I love the company from a boring dividend value.
Yeah.
And look at the chart. That doesn't look like a casino stock, does it?
No, and that's the thing is this week's catalyst being the gap up, the range of which dips you want to buy at this point is wide. It's vast. And you can take the more speculative bottom fishing in cruise lines and airlines, or you could say that dip, that retracement was too aggressive for my taste. I'll take the more benign retracement in one of these maybe more fundamentally sound companies.
Yeah. Yeah. And I think that you can even do some hand picking, whether it's a Morgan Stanley, but even digging into financials, there's probably several, and the basket ETF approach is never the wrong choice if somebody's looking for a little bit smoother trade in most regards. Tyler, take the individual company risk out of it.
Yep.
So those are choices people can make. It's going to be an interesting theme over the next little bit. Maybe just one more, Tyler, in the name of banks, like you looked at Morgan Stanley. CIT was on our list last week. So like comparing like a Morgan Stanley, bigger play, much different type of play. Citigroup has been developing here though. This one actually, I like the price action here. It's
pretty. This is exactly what you want to see, right? Where buyers, everybody, I don't know, you say, I like this isn't an island reversal, but I like the kind of the thought process. The boat leaves the island without you. It goes up. You missed it. You're yelling, hey, come back. You left without me. It comes back. It fills the gap and everybody jumps back on the boat. That's healthy price action. That's what you want. This is what you would want to see in the Planet Fitnesses and the cruise lines and the airlines. This is exactly what should happen if bulls want to maintain the upper hand.
Yep. All right, boys.
I like that. I mean, that's influenced my own trading because, like, if you want to play the gap up retracement and beat up stocks, I mean, I think finance is the way to go. I really do.
Mm-hmm. Marky, I'll pitch it over to you next. Do you have any other news items, things you wanted to hear today during the show?
Just that Jay Powell said we don't know anything yet, but he's there to help us out in a speech this morning.
Jay Powell pounding the table, huh?
Like Jay Powell doing Jay Powell, like
Big
stuff.
Daddy Powell.
I mean, like we know the Jay Powell speech. I don't even know why he gives speeches anymore. Like he says the same stuff every single time, with the same scowl and the same concerned look. Like I don't like my job, but I gotta do it.
If you want a pretty boring job as a speechwriter, go work for Jay Powell. That's for sure. I mean, you could pretty much
a speech like
yeah.
So Jay Powell spoke and nothing happened.
And the dollar didn't move at all, and it didn't update anything.
The same thing he's been saying for 4 months.
All right, back on the market here, Tyler, as we kind of give final thoughts. We're going to have, there's not a lot going on in the news here today. I mean, we hit the major stuff that's been developing. I know that the Russell 2000, it took off big earlier in the week. Did you have something you want to talk about with the rut?
No, you're welcome to all you Condor traders.
Yeah, a little bit of a backfill for the neutral traders, right?
Yep. Yeah, you wanted this. You wanted this if you didn't get stopped out yet. I think it's a good thing. I think it's a good thing ultimately. You didn't have a good entry anyways, so give me a pullback, fill the gap. It's still constructive. That's the thing. I don't let down days like this worry me if it's still within the confines of an uptrend and healthy. So
And as
I wouldn't
far
read too
as
much into this.
value reopening, rotation, finance, small caps, epicenter, small caps and finance chart looks a lot more constructive than the epicenter, casinos, and cruise lines and airlines charts do.
Mhm. By the way, I don't know if you guys saw this week. Look at either EEM or SPGM. Do SPGM. Actually, no, EEM is the one you trade a lot. We can do EEM. Same story.
Yeah.
Mark, the global stock market, I just saw this. I assumed this already. I pretty much knew it. But the global stock market value hit its all-time record high on Wednesday at $95 trillion. And that's when you account the US markets, the European markets, and every other market all over this world. We literally did hit the all-time high this week.
Now, and here's the thing as an investor. At some point in the future, whether it's next month or 3 months or 5 months from now, you'll hit another all-time high, right? I mean, that's the way it goes. And so it's just finding a way to invest and be cautious and this and that. I mean, it's not the last all-time high you've ever hit.
Yeah.
It's the way this stuff works.
Absolutely. All right, guys, let's get some final thoughts for our audience out there. By the way, really enjoy these shows whenever we come on in here, and appreciate the chat. I think I did miss a couple of questions today as I was kind of, running the conversation. Dina had a question around options on Bitcoin. Dina, those aren't available to trade. I don't know why they list them if they're not going to make them available to you. I think institutions probably can use them between each other, but you don't trade options on Bitcoin. I don't even trade the Bitcoin futures, by the way. I trade Bitcoin directly through a Bitcoin account. That's my preferred way of trading. I know Tyler's waiting on an ETF to trade Bitcoin, but I mean, talk about a product that probably just does not need options, and that would be Bitcoin right now. We don't need speculation on a product that's up 60% in the last 3 months, Tyler. That literally would be the gas on the fire analogy right there.
Yes.
But it is what it is. Tyler, final thoughts for the team out there. I know that you've been, watching these markets like a hawk. You're a bull long term. What's your read and any insight you want to give them?
Oh, dude, I just repeat everything we just said. Let the market breathe. This pullback will create better opportunities, so welcome it. No, I think we touched on everything that I wanted to talk about today. So
very good, my man. Very good. By the way, that quote, that Mark Twain quote makes me want to go look up more Mark Twain. That man just has a way with words, just one of the all-time greats, no question about it. Mark, final thoughts for the team out there.
Just be careful out there, right? I mean, we don't have a theme, but we have a market that wants to go higher. I mean, JP Morgan, everybody jacking price targets up to no end for next year based on not very sound reasoning, in my opinion, but it wants to go higher like it always does, right? Mm-hmm. So be careful. So you have a desire to go higher, just needs a spark. We saw the spark on Monday and we all, almost got there. Eventually a sustainable theme will happen. Until that happens, be careful, trade your charts, but be cautious.
And my final thing, and it's a very important one, guys, don't leave me yet, Team Tackle. This one's very important. Tyler, can you go to the Trade Center? And we've got a request. My brother, the CEO of Tackle Trading, Matt, has been working with Mark and Christian on a project where they want to improve and make some changes and updates to our Trade Center. The Trade Center has a bunch of different tools in it, like the market skyline, the economic calendar, the news, the journals are there, all kinds of different things, including some calculators, some charts, and a glossary. We want to know what you like, what you don't, and how we can improve it. And Tyler, I'll drop a link in the chat, and you can even open it up if you want. No problem with that. We've created a little survey, and hashtag Team Tackle. Can you guys, those of you who are power users of Tackle Trading, who use our pro membership, who've been on the Trade Center, if you can take the survey, just type in the chat, I'm in. Let us know if you can help us out. We want to get some user feedback, some student feedback as to what's happened. So if you're one of my power users and you can take about 10 minutes to fill this out, just type in the chat, I'm in. click that link from Cody or myself, either one of them, same link. And maybe you can fill that out over the next few minutes and just do it right now. Mark, talk a little bit about this initiative, because I know you've been the one on point with this with Christian. And what is this all about, and kind of explain it, anything that I missed out?
No, I mean, we just want to we're always looking for ways to make our tackle trading product the best that we possibly can for everyone. I mean, whether it's our shows, we're always soliciting feedback for ideas for shows or scouting reports. And so we just want to make it a place that, we love you guys so much, and we just want to make it the best we can for you. And so you're the ones that use it. And so we just want to get your feedback on like what features here would help you. What would you use? What would make your trading and your experience and your part of this community a better experience? And so that's what we're looking for. And so by filling out this survey, it would really help us. If you need a link to the survey, send me an email at team@tackle-trading. I'd be happy to get you that survey link to you. That's team@tackle-trading. I'd get you a survey link. And just I'll get you the link. You give us the feedback, and we'll try to do our best to get those features and things in tackle trading and the trade center here that help you out.
And it goes within the theme that you guys have gotten to know with tackle trading over the years. We are a group, we're a tribe here of coaches and traders and students. You guys are a part of that team as coaches, and the people kind of building out this community over the last 7 years that we've had tackle trading. We continue, and we will continue to put work, effort, time, money, resources into improving the experience for you guys, so that you can become more educated, more informed, better traders, have better tools, whatever it takes. So guys, I appreciate all of this. I'm in here. I love seeing that. I really do appreciate it. If you could just take a couple of minutes right now, click the link so you have it. If you lose it for whatever reason, can't find it, buzz Mark an email. He'll get it to you, team@tackletrading.com. And then we'll compile some of that information and over the next little bit and start pushing some of this into motion in the next few weeks to months. All right. So appreciate it, guys. All of those of you who are in, definitely love that. Love seeing that. All right, guys, we are done here for today, Thursday, 11/12 in the books. The market's trying to find itself a little bit, red across the board mostly here, but it's been a very, very interesting week. We'll be back tomorrow with Coach Frank, Coach Matt, and the regular crew, and having a fun Friday session like we always do. We'll be looking at charts, and we'll be getting ready for the weekend. Tonight, Cash Flow Club, 6:30 p.m. Eastern time. 8:30 p.m. Eastern time, 6:30 p.m. Mountain time where I live. Coach Gino is going to be covering the Cash Flow Club. He's got a great show designed for you. Make sure you come and join him at 8:30 p.m. Eastern. All right, guys.